Question number 1 is compulsory and it is multiple choice. And question number 1 under question 1 was, what is the role of the accountant in a business? What is the role of an accountant in the business? Is it A, to prepare business plans? Is it this one, to prepare business plans? Is it B, to calculate the tax payable by a business? C, to record, summarize, and present information from documentation generated by business transactions? D, to ensure that the business is trading profitably. What is the role of an accountant in a business? Is it A, is it B, is it C, or is it D? The answer to this question is C. It is the responsibility or the role of the accountant to record, summarize, and present information from documentation generated by business transactions. Question number 2. Which of the following correctly sets out the accounting equation? Which of the following correctly sets out the accounting equation? Is it this one, where the net assets is equal to the capital plus profit plus drawings? Or is it this one, net assets is equal to capital minus profit plus drawings? Or is it this one, that the net assets is equal to capital plus profits plus drawings? Or indeed, could it be this one, that the net assets is equal to capital less profits less drawings? One of the things that you should always remember is that drawings are always subtracted. Drawings are always subtracted. Drawings are subtracted. So already we will know that this one can't be because the drawings are added, and this one can't be because the drawings are added. So it's either going to be this one or this one. But you see, you don't subtract profits, you add profits. And already we know by that statement alone that it can't be this one. The answer to this particular question is A. Question number 3. Which of the following explains the term current assets? Which of the following explains the term current assets? So, is it A, that a current asset is an asset currently in use by a business? Or is it B, that a current asset is something a business has or uses which is likely to be held only for a short time? I'll repeat that. Could it be that B, a current asset is something a business has or uses which is likely to be held only for a short time? Or could it be C, that a current asset is an amount owed to somebody else which is due for repayment soon? Or could it be that a current asset is money which the business currently has in its bank account? The answer to this question is B. Current assets are those things that a business has, owns, and is likely to use for a short period of time. Question number 4. Which of the following correctly describes the term debit note? Which of the following correctly describes the term debit note? And this is number 4. Could it be that a debit note is issued by a supplier to a customer to demand payment in full for goods supplied? Is that what a debit note is? Could it be? No, that is not what a debit note is. How about B, that it is issued by a customer to a supplier to request a credit note? That it is issued by a customer to a supplier to request a credit note. Could it be that one? How about C, that a debit note is issued to a customer when goods are delivered? Or could it be D, that it is issued by a customer to a supplier to cancel an invoice already received? Clearly, this is not it. No. And could it be C, that it is issued to a customer? No. Because a debit note is issued by the customer. So it is issued by the customer to a supplier to request for a credit note. This is the answer, B. So you need to know what a debit note is, and you need to know what a credit note is. I would like to explain that to you, but I invite you to subscribe to my YouTube channel, Captain 37, for more, and indeed you may actually come across the answer to that particular question. I'll be glad to explain this in one of my classes, and in one of my classes, in all my classes, in some of the classes, in my classes, I have explained what a debit note is and what a credit note is. Join those classes. Question number 5. Joe Mundia bought a shirt for 850 kwacha and was given a discount of 10%. How much did he pay for it? So, Joe Mundia goes into a shop where there's a price for a shirt. Is it a shirt? Yes. The price for a shirt is 850 kwacha. And is given 10% discount. 10% is 10 over 100. You multiply this by 850. That goes with that. That goes with that. So how much did he pay? He paid 85 kwacha. And so the answer to this question is B. Which of the following items is a non-current asset? Which of the following items is a non-current asset? Payable? Nope. This one's out. It's not. It's out. It is not an asset. Receivable? Receivable. Non-current. Receivable could be. C. Plant and machinery. Plant and machinery. D. Capital. Capital. No, capital is not an asset. So the answer could be B, or it could be C. To best find out what the answer is, you need to know what a current asset is. A current asset is that which a business is going to use within a short period of time. A non-current asset is something that the business is going to use over a long period of time. So between receivables and plant and machinery, which do you think is going to go for a long period of time? Is it receivables or is it plant and machinery? Clearly the answer is C, plant and machinery. Question number 7. Which one of the following is an example of a direct cost? Which one of the following is an example of a direct cost? Direct material, insurance of machinery, salary of supervisor, or factory rent. Which one of these is an example of a direct cost? The answer to this particular question is A. Direct material purchased for making specific products is an example of a direct cost. Question number 8. Standard costing is a technique which compares predetermined costs, that is, standard costs, with actual costs. Which one of the following is the difference between a standard cost and an actual cost? Which one of the following is the difference between a standard cost and an actual cost? Is it A, contribution? Is it B, profit? Is it C, standard? Or is it D, variance? The answer to this particular question is D, variance. A variance is the difference between how much you had predetermined to spend and how much you actually got to spend. there is a variance if there's a difference between those two. Question number 9. James Banda bought machinery paying by check for 9,500. James Banda bought machinery paying by check for 9,500. Which of the following describes the double entry accounting of this transaction? Which of the following describes the double entry accounting of this transaction? So what happens, like has already been indicated, Vabanda wanaenda kugula machine, but he paid using a check. So in short, this question is basically asking who is being debited and who is going to be credited. So if Vabanda bought a machine, it means that he is in receipt of machinery, meaning you debit machinery. And since he paid by check, it means that you're going to credit bank, because checks are dealt with by banks. So our answer should clearly indicate that Banda debited machinery and credited bank. Let's look for that. So is it A, debit bank account with that amount and credit machinery with this amount? No, this is it. This is not it. This is not it. B, debit machinery with the amount, yes, so far, and credit James Banda with this amount. Credit James Banda with this amount. No, this is not it, because we need to credit bank. We need to credit bank. That's what's going to satisfy this particular answer. So it is not A, it is not B. C, debit machinery account with the amount and credit bank account with this amount. Yes, this is it. Because with this one, like you can see, debit machinery account, which is this one, that you debit machinery account, and also you see that you need to credit bank account, and so there's credit bank. The answer to this particular question is C. Question number 10. What is the meaning of a flexible budget? What is the meaning of a flexible budget? Is it A, a budget which is designed to remain unchanged irrespective of the volume of output? Clearly here, no. The very fact that this particular answer, proposed answer, says unchanged makes it wrong, because flexible means something that's able to change. So could it be B, that it is a budget which is designed to adjust the permitted cost levels to suit the level of activity actually attained? This looks like it is the correct one, but let's go and check what C is. That it is a budget which is prepared at the end of the year? Nope. That it is a budget which recognizes both fixed and variable costs? No. So clearly the answer to this particular question is B. And by attempting these questions, you will be adding on to the likelihood, the possibility of you passing, because these multiple choice questions, not only are they important, they also provide you with an opportunity to be able to know, or to be able to choose the correct answer amongst other possibilities. They can get tricky sometimes, but once you've known the principle, you are good to go. I invite you to subscribe to my YouTube channel, Captain37, follow and like my Facebook page, Marketing Study in Zambia, and get in touch with me privately in case you may need help with your studies. I wish you all the best, and for now, goodbye.